We've got with us T R Srinivasan, the CFO at Varroc Engineering, joining in on the show right now. Mr. Srinivasan, thanks so much for joining in today. How is it that you would summarize the quarter gone by for you? And would you say that, with Q2, the worst may be over? What is the sense that you're getting?
Well, we are certainly hoping that the worst is over, but we are not so sure at the moment.
Okay.
As you also know very well, the visibility of the market conditions is quite limited at the moment because there's still, while there is some green shoots we can see during the festival season, but there is no trend as such emerging as to whether there is a turnaround coming up or not. And the other thing, obviously, complicating factors is also the transition to BS6. And we have to wait and see how that plays out. So at the moment, we are keeping our fingers crossed.
But tell me, what is the trend like in terms of orders? And is there, or rather, are you yet to see its impact in the coming quarters? Are things getting worse before they get better?
We certainly hope it starts getting better from now on. But what's been happening in the last few months is the OEMs have been focused on liquidating the pipeline inventory with the dealerships and so on in preparation for the transition to BS6. And that seems to have taken place to a large extent. So at least the inventory overhang, which was impacting the industry, seems to be to a large extent solved. What is next? The critical thing we need to see is the impact of the transition to BS6, because there is clearly going to be a cost up in terms of the price to the end customer because of the upgradation of the vehicle to comply with the BS6 norms. So we need to see what is going to be the consumer response to that and how it impacts the demand. So that's a thing which will impact the demand going forward.
But your bottom line as well was impacted by the ongoing ramp-up phase. What exactly is the update on that front?
Yeah, the ramp-up, as we have explained in our results presentation, we had set up 3 new facilities to cater to all the new orders that we have been winning over the last couple of years. These facilities are in Brazil, Morocco, and another new facility in Czech Republic itself. Plus, on top of that, there are 2 more facilities which are coming up, one in Poland, other in Chennai. And obviously, there is a lead time before these facilities can ramp up and reach the full revenue potential. And that is what is kind of dragging down the margins at the moment. We think this will, to a large extent, the ramping up will be done by towards the middle to end of next year. And then you will see the benefit coming up in terms of the margin improvement from that point onwards.
Okay, and can you update us on the working capital management in Q2? Tell us about whether or not there's been an impact on account of the slowdown in EU and North America. Has it enhanced the need for higher working capital?
Well, the working capital front has been, I would say, fairly comfortable. We have not had much of pressure in that. And the main thing we have been focusing on is to correct our inventory levels in line with the lower volume pickup by the customers, and obviously there's a bit of a time lag to do that from the time we see the visibility on the volumes, which we have been trying to address and to a large extent have been able to do that. So working capital as such is not an issue, but where we see some stress is that some of the OEMs are extending their timelines for the launch of the new programs. So some of the development activities like tooling development and engineering development related costs or the reimbursement of that is taking a bit more time, but that's a matter of a couple of quarters to come through and get corrected. So.
A little bit about how the global lighting business is shaping up. There has been some headwinds when it comes to demand. What is your exposure to JLR and Tesla, and to what extent did that dent your performance?
Yeah, so historically, the 3 biggest customers for us have been Ford, JLR and Tesla, and they continue to be very important to us. And of course, some of them have their own issues, which is all well known by now. What we have been doing consciously is to diversify and expand our customer base. So as a result of that strategy, we have been winning a lot of new business with other global OEMs like the Volkswagen Group, Fiat Chrysler, Renault Nissan, and so on in the last 2 to 3 years. And now we are starting to see the benefit of that strategy coming through. For example, Volkswagen, which was our fifth or sixth largest customer till last year, has become our third largest customer in the latest quarter. And going forward, we expect them actually to be our biggest customer in the next 12 to 18 months. So, and similarly with Renault, Nissan, and so on. So the customer diversification strategy will help us going forward to handle downturns as and when they come. So.
All right. Thanks so much for joining us this morning, Mr. Srinivasan. Good having you.
Thank you so much and have a great day.